Okay,
Yeah.
so we are live.
Oh, perfect.
Hello, welcome to the next episode of interview series. Today we have a special guest, and algo trader Mikos, who is Manuel as well as the algo trader, and I'm really looking forward to interview with him because he, in a very interesting way, when he started just with some, as many of people, just with desire to learn the algo, and step by step he built up into algo trader who is able to winning the challenges, to pass the prop trading challenges. And what I really like that it's not a coincidence, as you will see in the interview, there are certain steps and certain methods he's following, and which basically have coded success inside. And I see the pattern, many of those of patterns in other successful traders. So again, hello, Miklos, hello, Thomas. I'm glad you are there today, and let's start with the first question already. And just for the audience, Miklos, can you tell us something about yourself? Where are you from, and what are you doing?
Hi, everyone. Thanks for having me. Yeah, I'm 35. I'm Miklos, 35. I'm from Hungary originally, and at the moment I'm living in the UK. And I started the trading journey back in 2010. As I started with the first stock course, and later on I transferred to Forex with some success. But I really started doing like seriously from 2022 when I started with the prop firms. And of course, I'm mainly focusing on Forex because of the prop firms. I know at the moment the prop firms are futures also, but at this stage I'm just focusing on Forex, and I try to build manual and algo strategies for the market.
Thank you for introduction, and maybe so let's move a bit to your start steps, to your first steps, which you told that you took some courses. So what was how it looked like? You was just interested in trading, so decided to do some course, and how it just basically started, and what was the output of the course?
Okay, so originally I look for something which can make me free. So it's good some business, and but I ended up always when I read books is that trading could be the best option for me, as I'm introvert. So and I don't really like working teams. So the trading was like a perfect way. And of course it's like able to work anywhere from the world. So that was the beginning. And when I was, I think, 22 or something like that, I went for my first course back in Hungary. It was a stock trading course. Then after I got back home, and basically I got a lot of knowledge, but I really didn't know what actually I should do. So it was a little break. After I went for another course. That was a Forex course. That time I had a little success. The strategy was like more like step-by-step guide. It used like basically you split your capital. If you have 10,000 USD, you split it for 5 or 6 part of it, and basically just always allocate like 1,000, 2,000, and use all the margin. That was the beginning. It was working, but I felt myself really not convenient because the risk was too big. Even though I know it was just part of my capital, it still was very painful when that whole part is just blown up, for example, during one day. So it was hard to keep maintaining. And after I had a little gap, I was changing countries. And when the prop firm came along, I was a bit skeptical, but it gave me the drive. It's possible to build up a real capital and make it the trading like your first income, even though if you don't have a large capital, so you can scale up nicely. Finally, I find a way how can I do that, because at the beginning I'm not really seeing, I couldn't really imagine, for example, from the 1,000 making like 100,000 and make a living from it, because speaking honestly, a minimum 50k USD need to make a living from the trading.
Yeah.
So that's why I started. I always did manually and find strategies manually, but later on, I realized this way is not too efficient, because I'm working along the side, I'm working a lot. I don't really have that time. And if I'm working this much, never gonna have enough time to testing one strategy manually. Even though I tested one strategy with one set of rules for 10 years, which would take ages if you go trade by trade, then maybe that approach is not the best. So they need to optimize it, and optimize and go through again. The 10 years is just not efficient. So I try to find a way, and I find some programs which one part was good, but the other part not really. For example, I could build Algo strategies without coding, but I couldn't test them, or even if I could test them, I couldn't optimize them. Or if this tool was thick, I couldn't have data. I know you can download from different data sources, but it wasn't just in one pack, in one environment, which I can trust. Because that always in your back of your mind, okay, but maybe the problem is not working, the data is not good, or the optimization engine is not good in this software. So later on, I find StrategyQuant, which is basically tick all the boxes and even more. So prepare, guys, you need to learn a lot, but you're gonna get some success at the beginning also without the enough knowledge.
Yeah.
And can you tell us, how did you find the StrategyQuant?
Who basically, not really remember, but I was just searching on the internet. It wasn't by recommendation, because I didn't know anyone who trading Algo, or at least I didn't know anyone who I can trust, apart of the some of the YouTubers, but you never know. So I'm just searching what's the best option. At the beginning, it was quite pricey for me, but anyway, I checked all the competitor, and still this is the best case, and it's much cheaper than just burning the money on prop challenges without knowledge, or hoping the best, like in a roulette.
Okay. And what was the special moment for you that you start feeling, hey, StrategyQuant is the right tool for me?
For instance, it's not a big thing, but for me it was a big thing. It's like, first buy the license, the ultimate, or even the trial, and oh Jesus, there is an option like this, is already built, and that one too. And okay, later that's okay, this is it. For example, I don't need to fuss about the data. Then if I have idea, I can do the. Even that time, I didn't know how to use Algo Wizard, but I see just the option like, okay, all right. If I want something and I have a knowledge, I can do later on, but now just focus on the data mining approach. And then, before I watch some walk forward testing and they do it manually, and I said, oh, just a button there, and you can do this, and you can choose the variables and function. Okay, so I said, that's gonna serve me for life. If I know all of this, then I'm all right.
Yeah, that's great.
Basically, that was the moment. It's like everything in one environment, what you need. Because even the manual trading, I have this indicator for MT4, but not MT5, but actually I get a profile challenge on MT4, and it's vice versa, always like a platform incompatible issues. And I like, you know, it's just you have a strategy, okay, doesn't matter, MT4 or MT5 or TradeStation, even though I'm not using those, but maybe later on when I'm switching to futures, I will. So it's very convenient just to send out the strategy, whichever platform you want, basically.
Great. And maybe the audience who are listening us will be interested about how you started to use StrategyQuant and how you start to you develop your own approach, because there are endless ways how you can use it. Basically, trading is about endless ways, and you already emphasized that your trading has to be in line with your personality. You have to be fine with risk and all this, and so it's very important. And now, so maybe if we can move to the moment when you started to use the software and started to learn how to use it for algo trading and to beat to be able to win the prop tradings. So if you think about it, maybe a little bit about the robustness approach and to test strategies.
Oh, all right. So at the beginning, I think as everyone, you know, you have some courses already built in the program, or you can watch on YouTube. That's I basically watch the YouTube videos and tutorials, and I try to use that. That's the best way, I guess, is like trial and error. And later on, you know, when I really don't know something, I just search on the forum, and while I was searching, I find Chronex, Ivan, and he helped me how to really make this in the structure. Like basically, you build up your own way how to approach StrategyQuant and basically make it your own workflow, because you can build, you know, strategies one by one, but the best and most efficient way if you're using your workflow. So we did that, and basically with that workflow, I had success with prop challenges. Even though that workflow, it wasn't, you know, the best, or it's not the perfect strategies inside for sure, but still you are able to manage prop firm challenges if you let yourself time. So you need a really big knowledge if you want to pass the challenge in 1 month, and also still need a big chunk of luck to do it. But if you accept the fact, like it's might take half year or might take a bit longer, but you will get it even if you are not pro, and even if you making your own strategies or try to build your own workflow by your thing, that's still gonna work much better than you, that someone else's perfect system. The only difference is just let the program do the things and give time to it, and also allocate very small risk, especially at the beginning, because, you know, when you started the first portfolio, and of course it's very basic, but always, as I think, always think in portfolios, because one strategy may be good for this market, but for the next year it's not gonna be working. And you don't want that, you know, 1 year just always losing. So for the portfolio approach is the best, I think. And small risk, and let it run. And basically set and forget, because in algo trading, the method is like, basically you make all the decision and all the hard work at the beginning, and after that you not make decision. Only decision you make, you keep it run or not. In manual trading, you make decision every day, which is much harder. But in algo, you need to have all the structure already when you place any trade on the market. And if you buy a cheap challenge 10,000, you can make it like as a test, basically, because once the strategies or the portfolio done, the best approach would be if you're using on demo and testing how it's working. But I'm quite impatient, so I never do. But I suggest I'd rather use a challenge. It's a cheap challenge. At the beginning, I did the mistake also. I bought the big challenge, the 100K, 50K, but now what I passed the challenge was the 10K. And why I was able let the robots, which I wasn't sure it's really good, just only relied on the data, because the capital wasn't big and even the risk.
Mhm.
If it would have been a 100K challenge, most likely I would not pass, I would fail it, because I not leave myself enough room to work with my emotions. That's the, I hope is understandable, but that's the best way how I can describe.
So you mean you should go step by step and build
Yeah.
up the confidence. And maybe you also meant it's interesting that you are manual trader as well as algo trader. And if you tell us how you are building up your confidence, so you are able to let the algos run, or you are able to stay in the drawdown and wait again for profits. What is your approach to this? Because many traders have a problem that they have portfolio and they have backtest for 10 years, but then they start to trade the strategies live, and they get drawdown, and now they are start to think, well, was it true? Does it make sense even to do it? What gives you the confidence that when you get a drawdown, or even to remain for a long time for 6 months in the challenge and to not stop it or start to risk more? What gives you confidence?
Because the data helps a lot, to be honest. Even if you don't know inside out your strategies, but you build with the data mining approach, you know it's very unlikely to lose the account. I mean, not the propaganda, but very unlikely, because I was focusing on the method. The main metrics was for me the drawdown. So I know I choose most of the time the less drawdown strategies.
Mhm.
So I knew it shouldn't be a big problem, especially if I apply 0.1 lot.
Mhm.
That makes me a confidence. And also, because I work with the portfolio, so they should work together. So one is drawdown, the other, it's very unlikely that all of them drawdown in once.
Mhm.
So it's helped me. And in StrategyQuant, even if you beginner with the workflow or spend a little time with it, it's like, you backtest even 25 years of data. It should come up, it's something really, really not right. Especially I tested the robustness test, like I using the method I testing on different instruments, two or three different instruments and different time frames, and slippage test sometimes. And one of the most important for me is the Monte Carlo.
Mhm.
So if I shuffle the card, the sample size of the trades is still working. Okay, maybe not gonna be that nice, steep, stable equity curve, but mostly plus or a small drawdown end of the year. Not in month, could be losing month and stuff like this, but I always check end of the years mostly. And that was enough. I knew it could be much better, but if you are not pro yet, just give yourself time and a small risk, and they're still able to, make success. Even now I have the challenge is like now I had a 0.5% done and I stopped trading. I'm waiting for the payout because I know I'm not gonna, switching my job with a 10,000 account prop firm challenge. I know it's about this, you need to scale up, but for that, the most important, not strategy hopping, not change always everything, just try to find your confidence.
Mhm.
And
You mentioned
yeah.
you mentioned the data land in your robustness testing approach. Do you prefer to test your strategies on very long data history?
At the beginning, I was testing like from 2003, but later on to quick up butter process, I was just thinking about 10 years. Because maybe it's come with my approach, I manually trading of 1 minute, 5 minutes. So it's really hard for me to make the switch in this big long period. But I'm thinking it's my own opinion, and it's not really backed up by data, I mean by success, but I think I'm gonna follow that approach. I just using maximum 10, really maximum 15 years. Because anyway, every half year, maybe I'm gonna apply a new portfolio later on. I don't know, or at least the first week gonna be half year. I don't know yet, but I'm not trusting it's gonna. I don't want to expect which is worked 25 years ago is gonna work now also nicely. I can imagine the basic is still working, but if I have the option to use StrategyQuant and AI and technique, why I not optimize more it? It's not means like I'm perfecting, but in the normal make it the performance better a bit. It's like, for example, in the gym also, back in the days, you can have a nice body, but now we have better, equipment, which is more efficient for a special part. I'm thinking like this.
And if I ask you about what kind of strategies do you prefer, more complex or simple, or because you are also like manual trader, so you know a lot about markets, and so when you are building strategy or choosing which one you will use to your portfolio, what are your points to the importance?
I try to make as simple as possible, and especially on the conditions. For example, the entry-exit confluences, I do it maximum 2 confluences, but to be honest, it's most efficient. It's less part which could go wrong. And even in the data mining approach, I try to use just those indicators which I kind of know how to work, or at least used or using at the moment during my manual trading also. And I think, in the internet, there are lots of, different opinions, but what I realized, the most of them, which is come from real traders, they try to make as simple as possible too. So this is like almost everyone saying the same. Of course, in manual trading, I try to, scale in, scale out. After this confluence, I go to the trader. But if doing this, then not. The people tend to feel the more complex, it's more robust, because I'm sure hedge fund traders have like a very complex system and stuff like this. But we are retail traders, and I think the world is enough complex already, and the simple things could work.
Yeah, and understand, and I really like this approach. It's called also his approach. It's simple as possible.
Yeah, simple as possible.
His approach.
Especially at the beginning. Later on, you can make an experiment, like make a lot of confluences. But why would make your life harder? But as a beginning, you not even can monitor which could go wrong, even during the building process.
Understand. And and maybe do you have any advices for those who have StrategyQuant and want to start? Maybe advices regarding the knowledge, or where to find ideas, or what's important. It is important to have right know-how, or from the point of knowing yourself, or the confidence and stuff like this.
I think the beginning should start is like a real honest conversation with yourself. Where are you right now? Which stage of your life? And how strong is your mental discipline? Basically, how you can act on the market when it's not really nice. If you can still follow the process or not, because that's the stage of your life, and the mental discipline and your strategy, those three need to align. And first you need to find out where are you, what's your strength, and then choose a strategy for those two, because the life is going to be much easier in this way than just find a strategy on the internet for someone which looks really nice and for them very likely working, but it's not means for you will working. It was loads of time to understand this. Why not just show me strategy and I'm going to follow the same and it's going to work? Yeah, but the problem, on the paper you're going to follow, but in the real life you won't, because your emotion won't allow yourself. And even if you do it 2-3 weeks, you're really fighting with yourself. Those are still accumulating in yourself. And sooner or later you're going to make mistakes. And if you do one mistake, then you're going to follow the other one. Especially if your first mistake is very big and you can see it's a big drawdown. It's very hard to get out from a drawdown as a beginner. Even took time as a manual testing when I had a minus 10% drawdown. For 1.5 years, I not even tried to get out from the drawdown during the manual testing. I just started a new one. Just imagine how hard it could be if the real money on the table.
Yeah, exactly. Mentally, it's very hard to focus on just recovering from the drawdown.
Yeah, and a little bit need to change your aspect for a longer time. Even if you're trading on the 1 minute chart, it's still, you're not gonna make a living in 1 day, not even a month, not even half year. And those pro firm challenges are really good, but need to handle with careless and know what you want from it, because it's just a tool which is quicken up your process. But if you're not aware, you're gonna build up lots of bad habits, which later on it's need to take away. Because at the beginning of the pro firm, it was 10% or 10% in 1 month, and if the really beginner that time, then you're gonna believe this is the normal. And when you, for example, discover Darwinex, when the traders just, if you're making 2% per month, that's enough. That's actually very good. But if you're just focusing on the prop firm and those targets, it makes you not happy and a big chaos in your mind.
Yeah, exactly. And you touched the Darwinex and probably Darwinex 0.
Yes.
Which one is more favorite to Darwinex or just regular prop trading companies?
To be honest, Darwinex. Yeah, my impatient side would say prop trading, but again, it's still a process in me too. Is accept it's not it's a long-term game. And if you see Darwinex is really good. Finally, they're not gonna penalize you from the drawdown. Finally, you have the ability and the track record, because track record, how you can get out from the drawdown. And if you get out from the drawdown, that's gonna give you the biggest confidence. Not really the data, if you get out of drawdown. And for this, there is no options in the normal or the normal prop trading firms. Because if you use the account, you lose it. And the other big advantage, which is not really visible, I guess, or we not emphasize enough, it's like you don't have track record. I have lots of account which I could learn from it, but those are all gone, no data anymore, because once gone, it's gone. But if you do Darwinex for 5 years long, or if I would do Darwinex from the beginning, like 2022 when I started the prop firm, then I already have 3 years live data, which is mine live data, how I act, even though in that 3 years was loads of strategy hopping, but still somehow that's the best representation how I act as a trader. So yeah, that's the biggest advantage. Okay, it's just 15%, but but you still have the ability to scale up.
Yeah,
And
once you have
15%.
one, yeah, exactly. Once you have one track record, you can just simply multiply it to the more maybe prop trading challenges, because you can use the copier, and in this way you can multiply your profits. So yeah, completely agree.
And here comes also the StrategyQuant, because most of the strategists are able to make it an algo from it. Very few, I guess, which is not able to make, and this is just gonna be more and more true as the IT developing. So even you don't need to use copy trade, or you just build your algo and let it run, because end of the day, all of our goals to have freedom. You can do manual trading to to feel the connection with the chart and generate new ideas. But otherwise, it's gonna be boring if you okay, follow a rule. Now I'm not fighting with myself. I know I'm not gonna make silly mistake. Then why you wouldn't use an algo? It's like basically you hire an employee without a cost.
Yeah.
Very good quote. Like employee 20 full-time traders for you.
Yeah. Yes. If I make a mistake, if I not make a mistake at the hiring.
Yeah, you have to the hiring. Which HR?
Yeah.
HR unit.
And now you touched some interesting topic, because you are comparing employees and strategies. Can you tell us how many strong employees do you have in your portfolio?
It's I use the portfolio like minimum 15, between 15 and 20 employee. So it's like a middle-sized business, I would say.
Yeah. Okay.
Yeah.
And
I want to go higher, but first of all, Ivan mentioned 20 is all right, and also it's depend on the capital what you have. But it's generally me. I always think the more is better, but in this trading, not really. So now I try to focus more on the quality. So I rather have the 5 employee, but I know they are good and I can trust them in the long term without a big deal, rather than 20 employees. Especially the gold employees I don't like. They always trick me. The gold I don't like.
And how many markets will trade? Or
mostly the GBP, USD, the cable, GBP, GPY, Euro, USD, basically the main pairs. Sometimes gold, if I want trouble for myself. And now I'm building strategies for the indexes. I'm thinking I'm gonna have a portfolio just for the indexes. But for that, a little bit need more knowledge, because in the life test is always different with. Anyway, that's not ready yet. But Forex pairs buildings are much easier than the indexes. That's
for the CFDs.
Yes,
you need to you need to have a lot of knowledge about the data, because every broker has different data feed, and of course different settings for tick, pip, step, and size. But we introduced something what we called broker profile, which we hope that will help to anyone. And of course, we are recommending to import the data from broker platform.
But is this already the new release, the 1.42, right? Because I realized there is like FTMO 5%ers and Darwin's data set.
Yeah,
Yeah, it's really cool.
the newest version, and maybe it's worth to. We can point you to some materials after interview, or it's worth to check, because there's a big problem. Was a problem that indexes are basically very good markets, but because they're mostly going one side.
Yes.
So when the index is rising, then it's fine. When it's dropping, it's a problem. For Forex, you are not sure if it's rising or falling, it's right or wrong.
Yeah.
But the problem is, as you told, the data. So especially Thomas invested like hundreds of hours into it to make it more straightforward and to be able to create something in StrategyQuant and run it live, which is important. So there was introduced this functionality called the broker profiles, and which now allows to import data and data settings, especially data settings from platform into StrategyQuant, like one click, or even just select some presets directly for your broker, use it, and in this way you can develop strategies which have similar backtest result in algo trading platforms, even you are using CFD indexes. So
that's really good news.
Yeah. So basically, you can still follow the logic and focus on what matters. And in StrategyQuant, the software will cover the rest. And there's a lot of, we can for 1 hour we can speak about what points we had to solve and what were the issues. But we put it together, so it's there. It's in the new version. It's It's really new functionality. Yeah,
that's really good news, because that I always spend the time and I don't really want to spend the time. It's a little bit was annoying for me. So thanks so much. It's a big help.
We have automatic script, and most part of the process is automated, but still the trader needs to understand the terms of tick, pip, step, and size, and how they can apply it to the different brokers, because still there are some discrepancies in size of the pips and points. So you need to be able to adapt stop loss and take profit size in points or pips. So
yeah.
This is the trap. I think.
But I think now we can help easily, quite well, easily on support, and Thomas spent the whole Christmas on it, and but it's out. Yeah, great. Maybe we can return back to the topic, but I really encourage you to go to also build portfolio for indexes, and maybe we'll have one of our future interview. I'm sure that you will continue successfully, and in future interview we can maybe speak about it, because from our experience there is higher chance of success when you start to use indexes.
Yeah, it's more stable, definitely. Mm-hmm. For Forex pairs, I'm mostly anyway using just mean reversion strategies, because it's very unlikely it's catching a big trend, and anyway I'm not a trend follower.
Yeah, but anyway, you found a way, even with Forex, which is it's very tough and hard market, and you did it. And what I liked was really that you told that it's like 50% is maybe the software knowledge, and another 50% is to know yourself, know in your stage you are, accept it, be honest to yourself, and build up on this. It's something I really would like to emphasize. I think it's important in algo trading, or generally in trading, if you want to succeed. And so I think we covered your process. We talked about the way you are creating strategies, and I think the important principles. And maybe there is, if you would like to ask anything to the listeners, I think now is the right time. Do you have any advice to them, or if is something more?
I think the most important, from the starting point, you're never gonna be perfect. So it's the better if you're just starting and not want to be perfect from the first point, and get the knowledge later on and scale in your knowledge of the trading and also scale in capital. And this way, later on, you will find your goal and keep the risk really small at the beginning, especially on the test phases. And I just could repeat myself. Really important to know yourself, because that's gonna keep you in the game. And at the beginning is of course we are here for the money, but realistically not. It's like a long journey.
Mm-hmm. Right.
It's very cliche, but unfortunately I have to admit this one also. And the most thing is, like, even if you feel the strategy is not perfect, it's still better than you don't have strategy. And still with the strategy, if not more, not making money, at least you can collect live data for yourself. And that's the most important. And how you act during that process. You can basically watch yourself. Did I stop running the Algo, or did not? How I felt? And that knowledge you can use for the next workflow.
Mm-hmm.
Yeah.
Great, thank you.
And you touched, you touched some interesting topic, because I know that a lot of traders have some tendencies to do the manual update in the opened positions, especially when they can see that the positions are in the profit, but then suddenly it ended up with the loss. Do you have also this kind of discipline issue, and maybe can you give to the audience some advice how to avoid this?
Yes, of course, it's like a human thing. If you see in profit, you want to take it in your pocket, and the drawdown is letting run, because we hope it's gonna coming back. But in algo trading especially, you decided everything during the building process. After that, you are just basically monitoring, and if really something big happened, then you stop, because you already did the work. And if you not let it run, then all your data, what you tested and what you seen and what you acknowledged and said, it looks like, once you go into your system during the live trading, that data not gonna be valid anymore, because you already tweaked the system. You stopped at the drawdown, or you took half profit, and those trades should cover the loss what it's come, or the loss what it was the past 5 days. It's gonna be a totally different strategy or portfolio, or minimum the results gonna be totally different. And how to try to avoid the first thing, it's like, first is try to be aware when you're feeling, you're gonna feel that you want to close it. Everyone want to take the money, but even first just be aware, and maybe the next time you're not gonna act, and later on it's not gonna be disappear. It's only what's gonna change is you're not gonna react on that. Or if it to disappear really that much is not bothering you, it's took years, and once you are already successful, of course, then you're gonna close it half profit, because you not really need that success, not really need that money, so it's easier to let it run. But at this stage, the most important to keep the strategy running. And first be aware, act or not act, not blame yourself. It's normal. You're gonna do silly mistakes, but as quick as eliminate these little issues, the success is gonna come much quicker. Because anyway, there are lots of other criteria or circumstances that are gonna influence the trade or the market. If you not avoid these ones, it's almost impossible to make long-term success.
Yeah, and every portfolio suffers for the drawdown. what helping you with overcoming the drawdown periods? Because sometimes it can be hard for our minds. Do you have some tips how to avoid it?
Yeah, first of all, you are a beginner trader, or I am. I count myself as a beginner trader. Then don't use the money what you can't risk. That's the main principle. The trading account, it's not for the bills, not for the next car, not for the holiday. You don't have any expect from that account. Only you watching and basically testing the market, because anyway at the beginning you shouldn't have a big capital. So that capital what you're trading on, it's not gonna make a life-changing event in your life. So that's itself, it's give you a much bigger freedom, because that money, I know it's every money need, but that not really bother you. And if the big capital is, or the capital is not big, that's one thing done. And then even that small capital need to be small, because that keeps you in the game. Because if you, okay, I don't mind, I have 10,000 account, I can lose. I have 10, for example, my net worth is 50,000 and I put 1,000 account, it doesn't matter, I don't care, I can lose it. But if you use, for example, one lot on that 1,000 account, that the sample size not gonna work out himself. It's because a couple of trades, and so maybe if you catch the drawdown period at the beginning, you won't have enough data, and the strategy or the Algo portfolio won't have enough time to work properly as it should. So basically, how to react in drawdown, basically don't react. Because at the beginning, you already choose, when you are calm, the right risk allocation and the right capital allocation. And that's 80% the job done to survive the drawdown.
Okay. And what is the right time for you when to disconnect a losing strategy or not successful strategy? And how to recognize it that the strategy may be failing?
The data what I have, because I mainly choose the very small drawdown. So if I see it's like, it's a big losing streak, for example, I lost 5% in 1 week, then I check first, it was a very bad coincidence, like all of the strategies performed not too good, or something's really changed. But for this, I don't have too much knowledge or I would say experience. I would just try to compare what it should be doing in the sample size. Was any drawdown like this, or as it close, because it's never gonna be the same. For example, I choose the strategy is like minus, the biggest drawdown was 6%, and the consecutive loss it was 5 maximum, and now I see 7 loss, and it's not means I'm gonna stop it, because it could happen. But if I see, for example, 15 consecutive loss, even if it's a small risk loss, that I would question what's going on.
Konrad, do you have some other questions?
I think we covered it all. So I think it's time to thanks Miklos that you joined us, and
you're very welcome.
Yeah, you are willing to share your time with us and your experience, your personal experience, your life. So that's great. Thank you very much, and I am looking forward to see you to the next interview, and wish you a lot of success with the trading.
Thanks very much. Thanks for having me, and all the best for the other traders.
Thank you. Bye.
Bye.
Thank you, guys. Bye.
Thank you. Bye-bye.